Are you torn between parking your money in a safe fixed deposit or taking a chance with mutual funds for potentially higher returns? If you have found yourself asking this question, you're not alone. In India, fixed deposits (FDs) have been the go-to choice for those seeking stability, while mutual funds offer the potential for better growth. But which one is truly the best option for you? Let us break it down in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So before analyzing which one is the best, first understand what is a fixed deposit (FD). So a fixed deposit or FD is one of the simplest investment options available out there. So you deposit a lump sum with a bank or an NBFC for a fixed period, and return you earn a predetermined interest rate. The beauty of an FD is that your principal is protected and the returns are guaranteed. No matter what happens in the stock market, your FD is safe and sound. But is that enough? Is the stability worth missing out on potentially better returns? So let us find out why some people love FDs. So the benefits of fixed deposits is number one, guaranteed return. So you know exactly how much you will earn, no surprises. Number two, low risk. Market fluctuations can't touch your FD. And number three, flexible tenure, whether it's 3 months or 10 years. FDs have flexible time frames. Number four, tax benefits. Tax saving FDs can help you save up to 1.5 lakh on your taxable income under Section 80C. Number 5. Special rates for senior citizens. If you're a senior citizen, you get even higher interest rate. So is this the right option for you? So who should invest in an FD? So FDs are perfect for someone who is a risk-averse individual seeking guaranteed return. Senior citizens looking for safe and stable income, those with short-term financial goals who don't want to take risk, and taxpayers who want to reduce their tax liability. So now we have a basic understanding of how a FD works and who is it perfect for and what kind of benefits it has. Now let us move on to understanding what is a mutual fund. So ever wondered how professional investors grow their wealth faster? Well, mutual funds might just be the answer. A mutual fund pools money from many investors and invests in a diversified portfolio of stocks, bonds, and other assets. Unlike FDs, mutual funds are market linked, meaning the returns depend on the performance of the market, but that doesn't mean they are all risky. There are different types for different risk profile. So why should you consider mutual funds? What are the benefits of mutual fund? Number one, higher return potential. Over time, mutual funds, especially equity funds, have delivered returns that beat inflation. Can FDs do that? Not really. Number two, diversification. Mutual funds spread your investment across various sectors, reducing risk. Number three, professional management. Don't have time to track the stock market daily? No worries. Professional fund managers do all the hard work for you. Number four, tax benefits. ELSS funds offer tax benefits under Section 80C while growing your money. Number 5, liquidity. Need cash? You can generally withdraw from mutual funds anytime, unlike FDs which penalize you for yearly withdrawals. So who should invest in mutual funds? So mutual funds are great for investors looking for higher returns who can tolerate some risk. People who want diversification without picking individual stocks, long-term wealth builders, and also taxpayers who want to benefit from tax-saving ELSS funds. So if you pause the screen now, you can see a comparative analysis between FD and mutual funds or based on various factors. So FD versus mutual funds. Which one should you choose? Still unsure? Ask yourself, do you need guaranteed returns? Then FDs are for you. But if you're looking for long-term wealth creation, then mutual funds are better. But you need liquidity. Mutual funds generally offer more flexibility. But if you're risk averse, FDs provide stability but mutual funds offer higher returns with some risk. Want tax saving options? Both offer tax saving benefits, but ELSS fund might give you better post tax return. So, when are FDs best? For safety focused investors, for senior citizens and retirees, and when you have short term financial goals and need stable return. But when are mutual funds best? For those seeking long term wealth creation, investors comfortable with some level of market risk, and taxpayers wanting to benefit from ELSS tax savings. So, what are our final thoughts from this analysis? Should you completely ignore FD? Not necessarily. A balanced approach works best. Keep some money in FD for security and invest the rest in mutual funds to maximize growth. The right choice depends on your financial goals, risk appetite, and investment time horizon. If you're still unsure and need professional guidance, then definitely consult with a certified financial planner to build an investment portfolio that works for you. At the end of the day, the right investment isn't about what everyone else is doing, it's about what works best for you. Let me know your thoughts in the comments below. Are you leaning towards FDs or mutual funds? And don't forget to like, share, and subscribe our channel for more personal finance tips. And if you want professional guidance about your investment and financial decisions, then don't forget to click on the link in the description to register for a free consultation with one of our certified financial planners for professional guidance. See you in the next video with a more interesting financial insights, and thank you for watching.
Definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.